Hello, agentpreneurs, and welcome to today's episode of the Daily List Report. As always, I'm your host, Randy Shiozaki, also one of the co-founders of ListReports. You can learn all about that in the description below. We've got another great show for you today. We've got Gino Barbaro, and Gino is one of the co-founders of Jake and Gino, and they specialize in multifamily real estate, education, investments. They have a bunch of cool stuff. They have blogs and seminars, but they're also active investors themselves. And so we're going to talk about that. We had a guest on a couple weeks ago. We talked a little bit about some of the fundamentals of real estate investing. We're going to carry that conversation forward today. So I'm really excited about that. While you're here, of course, please consider subscribing to the channel. Click that little bell so you're notified you don't miss any of these great guests. And of course, we're running a bunch of cool competitions and fun prize giveaways this month. So check the description below for links to that. Make it real easy for you to enter and win some fun stuff this month. All right. So why don't we do this without further ado? Let's bring Gino on. Gino, welcome to the Daily List Report.
Randy, thanks for having me on. And agentpreneurs, it is an awesome word, everybody, because at Jake and Gino, we create multifamily entrepreneurs. And I don't want anyone to think that, real estate is just about the asset. It's really about creating a business for yourself, creating a brand. If you're an agent, you are your own brand. You are your own business. And when you buy a multifamily or even a single family home, you're buying a little asset. You're becoming an entrepreneur. So the way you start off the show with agentpreneurs, man, hats off to you. I love that, bro.
Oh, thank you. We're really proud of that term. I've had any number of guests say to me, I think I'm going to borrow that term. But look, I'm an entrepreneur, right? I'm a technology entrepreneur, happen to be in the real estate space now. And we saw so many parallels between the life of an agent and the life of an entrepreneur. You got to do a little bit of everything, and you got to build a team, and you got to scale, and it's really challenging. So I'm glad that term resonates with you as well. So, Gino, why don't we start here? Why don't we take a moment and why don't you introduce yourself? Talk a little bit about what you're doing, how you got into the business, and then we'll get into some questions and some discussion.
Sure, Randy. I got into the real estate business back in 2002. Bought my first fourplex out of college, long time ago. I got into the restaurant business with my family. I had one restaurant. I loved it. Right? I have 6 kids, ages 21 to 6. So as I was growing the restaurant, I'm like, you know what? I need to make more money. And for me, the great pandemic came in 2008, which is, we all remember that as the Great Recession, right?
Oh, yeah.
We're going through something very similar now. It's a little bit different, but it just the whole parallels of the transfers of wealth and where some people are just really amazingly crushing it. Like Walmart came out with quarterly earnings that obliterated it from online. So for me back in '08, that's what I had. I had that struggle. So I said, I need to create some other types of revenue, some other types of streams of revenue. And I said to myself, I don't want a single family home because I don't want to fix and flip. I've got the job already. So I looked at real estate as just another way to start creating revenue to pay for all those weddings and for all those colleges. So that's how I really got into multifamily. Had made a couple of big mistakes with a mobile home park and then a strip center. And I always tell everybody, it's not the asset, it's the individual. I wasn't educated. And we talk at Jake and Gino, education times action equals results. Well, I was taking massive action. I didn't have the education. So when you couple both of those, I got fortunate, went out, saw a couple mentors, really learned the multifamily space, met Jake in 2009. We started investing in 2011. And Randy, it took us 18 months to find that first deal back in 2013.
Wow.
One of the hardest 18 months of my life. But I tell people patience, persistence, and willing to walk away. There was a lot of mistakes we made. But, ultimately, we got that first deal, 2013. Operate over 1,400 multifamily units. We are vertically integrated, which means we own all the processes. We buy, we manage, we raise capital, we do the whole, as they say, shebang. As an entrepreneur, Randy, and everyone listening to the show knows, we need to take the long game. You need to have no shiny object syndrome. Stay in that lane. I didn't deviate and go into self-storage. I didn't get into cryptocurrency. I stayed in multifamily. I learned it really well. And I was that farmer planting the seed and trying to go long-term, looking for that long-term horizon, having that conveyor belt, getting deals on that conveyor belt and letting those deals mature, whether it's a liquidity event from a sale or a refi, and just continuing that long-term process of trying to become successful.
That's really awesome, Gino. It's a hell of a story, really, right? So you're at a point now where you and your partner got 1,400 units, which is a sizable collection of properties. So, Gino, let's just say I'm in one of your courses, right? You're teaching me, and I've raised my hand. I've said, this is great. I want to do this. I have a vision for building a portfolio of multifamily properties. Where do I start? Where does somebody begin?
So the first thing anyone listening to this is really selecting a market, and you're seeing it right now playing out, right? Policies, not politics. Where are people moving to? Where's the migration? Where are the jobs migrating to? That's what multifamily is all about. It's all about jobs and employment. We like the Southeast. We're in Knoxville, so like I said, we're vertically integrated. So within 3 hours, you really need to select your market right now based on where the jobs and where the where the employers are. There's less risk that way. We're buying an income stream. If the jobs and the employers are leaving, are we going to be able to collect rents? Are we going to be able to increase rents? Probably not. So for us, anything in the Southeast, my partner Jake calls it the Southeast Conference. There's also other areas. Texas is blowing up, the whole state of Texas, but you still have to figure out what markets in Texas. There's parts of, let's say we'll call it Nevada, which is really exploding. Parts of Arizona, which Phoenix is the #1 multifamily market in the United States. So have that in mind. Select one market, and like I said, Randy, before, focus on that one market, especially if you're a new investor. You want to really learn intimately what that market's all about, what the expenses in the market are, what rents go for, who the employers are, where are the better areas of the market. Once you've got that figured out, it's time to start, contacting and networking with brokers and having brokers send you deals, right? Those are the first two steps that I think any investor really needs to focus on. And also, I would say, shamefully, I would join an educational platform, or at least a community. Bigger Pockets is out there. Start networking with others out there. And once, God willing, we're able to go to these events, go to events. That was one of my biggest mistakes early on. I didn't go to events. And, as luck would have it, I'm hosting 7 or 8 events this year with the Jake and Gino community. But that was my holdback, because I would say, oh, I don't need it. I have the education. It's not about that. It's about your network and the people that you meet. And it's amazing. You can meet 1 or 2 people. I can say that to myself early on. I met my partner, Mike, early on, life-changing. If I had not sat down at the restaurant with him and talked about China and oil and gold, never would be here speaking. So don't let those opportunities go by, especially if they're near to you and you can get to them within a drive or even an hour flight. Try to go to as many events as possible, because that's where you're actually going to expand your horizons and you're going to build your network.
I want to touch on that because something that I've talked about a lot on this show, and I teach people all the time, right? Which is, I hear people say to me things like this sometimes. They're like, oh, so-and-so got lucky. And the honest truth is, yes, there are a handful of people who got lucky, but most people that people think got lucky put in the time and the effort and put themselves in a position that it's just probability, not luck. It's math, it's not luck, right? Which is, you went to the events, and early in my career, this is what I did. I went to every networking event I could possibly find, even if it was late at night and it was an hour and a half from home. I drove out there, and that formed the foundation of relationships that I leverage to this day, right? So, people talk a lot about sort of paying your dues. That's an easy one, in my opinion, is you just show up. But if you have to show up, because you never know, to your point, who you're going to sit down and have a drink with, or have coffee with, or have a meal with, or whatever, or the person who just sits next to you at the seminar, right? And you hit it off. And that's where you found your partner. So I want to make sure that people understand that you have to show up. You have to go and do these things. You have to participate in the communities. And as you said, Gino, you can't just sort of say, hey, I read half the internet about this. I know what I'm doing. I'm good to go. Because A, you don't. And B, what you're saying, at least for this business, and I would argue for any business, relationships matter. And you have to show up in the right places to do that. Does that make sense?
Totally. And the harder you work, the luckier you get. The luckier you get, the harder you work. That's the irony of it. And I think for everybody out there, when you're going, be intentional. Know why you're going out there. And if you're Chicken Little and you don't want to go by yourself, take somebody with you. Right? I mean, at the very first time I went up to go to Rochester, New York to invest in a duplex, I went to go meet a broker. I brought my best friend with me on the plane just to make myself feel a little more comfortable. He knew nothing about real estate, but hey, you know what? I am not going to miss that flight because I'm bringing my friend. If I was going by myself, I might have 3 or 4 different reasons why I'm not going. But you know what? I committed. I brought him. He came with me. He learned something. I had a great couple days there with him. But don't make those excuses. This is the time when you have to get out of your comfort zone and find ways to get out of your comfort zone. That's why put a picture in your mind, right? And my picture in my mind back at the time was the pain of staying in my current situation, being at the restaurant, being in the kitchen, not wanting to wash dishes anymore. That's my current reality right now. If I don't get on that plane, That's going to still be my current reality. If I do get on that plane, I can create a different one. So if we can talk to ourselves and paint those pictures in our mind, it will help us move forward. And the anger, obviously, I don't want to be here. I need to get on the plane and go and look at these properties. That's what prompted me. That's what helped me get on that plane.
Absolutely, that makes perfect sense. Let's cover one more thing, right? So one of the things that you wrote about in a blog is some myths, right? And one of the myths that you talked about is find the deal and the money will follow. So we've established already, right, that to get started, you need to find a market. You need to do your homework to understand what the future of that market might look like. Is there an influx of jobs? There's an outflux of jobs, right? What's happening in the local economy and market? Is it a price point? And I think I would add to that, right? Just personally, I think there's different types of investors, right? There may be a particular type of property that you like. Remember, it's single family or multifamily. Maybe there's some sort of income levels, right, that you're either attracted to or you want to shy away from, right? There's all sorts of things there. But once you've done that, you can't buy a place without capital, right? So let's talk a little bit about the money and what you call the hunting, the fishing, and the farming.
So for me, I think I look at real estate, and I've learned this over the years. There's two functions to a real estate investor. We're either sourcing for capital or sourcing for deals, right? That's what our focus is. That's generating revenue tasks, right? Everything else, we're wasting time. We need to focus on finding deals, and we need to focus on finding that capital. Now, people say, should I get the deal first or should I have the capital first? Well, when you're raising capital, you sort of need the capital before the deal because you need a substantive relationship. So right now, whoever's out there saying it's not the time to get into multifamily, I can't find deals, that may be a good thing because right now you should actually be building your teams. You should be networking with brokers, and you should be out there because there's a ton of capital. Very rare in life does capital and deals come at the same time. When I started back in 2013, I'll give you an example. A one-bedroom apartment was renting for $350. Valuations are based on the net operating income. What do you think NOI was back then? It stunk. It was 1% GDP growth. The 2012 Jobs Act had just come out. There was no money out there, but there was a lot of deals. Now you look back at it, that was a lot of risk back then because we didn't know where the economy was going.
Yeah.
And you look fast forward to today, one bedroom rents in Knoxville, where we are, $675, $700 almost. So they've more than doubled, right? Yeah. So now obviously prices have completely elevated. So now everyone on the call, it's your duty to go out there, start raising capital, learn the space, learn whatever you're investing in, whether it's single family home, multifamily, self-storage. Tell the people how you're going to help them. Can they trust you? Do you know them? And do you care? Those are the three things that you have to convey to them, right? Can they trust you with your money? Do you know them, right? And can you help them? Can you help them with their situation? They've got money in the stock market. Can you give them a better rate of return? Can you give them, more stability? If the answer to those questions are yes, then guess what? You can get an investor. But now's the time to be working on your systems, working on your business skills, and working on raising capital. Because in a year from now, when the moratoriums are lifted and those mom and pops out there are not really running those properties, and all of a sudden they've got a lot of evictions, guess what? Those deals are going to start showing up, and then you're going to say, "Oh, I wish I had started sooner." So it's never the right time. I have 6 kids. It was never the right time to have a child. It happens when it happens. You take it responsibility, and life goes on. So don't worry about where we are in the market. Just start sharpening your pencil right now because it's coming.
I think that's tremendous advice, right? And that realization that deals and money don't always come at the same time, right? Or there's some imbalance there, which makes sense because you're looking right now. I'm looking naively at the market. And I'm saying, gosh, money is cheap right now, super cheap. Lots of people looking to put money to work. Prices are really high. I'm like, can you cash flow a place? Like, there's a lot of questions, but who knows what's going to come? But if you get that foundation in place, you get that capital raised, or at least those commitments of capital, then you're in a position to move at the right time. And just like you, right? It might take 18 months. It might take 24 months. But understanding where you want to go, having the fundamentals and the foundation in place so that you can strike when ready. And that's always the key, isn't it, Gino? Is that the ability, the people who get the best deals are the ones who are ready to strike when the deal happens and they're patient enough to wait for the right deal. Isn't that the key?
That's a great point. And I would also say, Randy, how much more confident are you going to be when you have $100,000 or $200,000 committed of somebody's capital versus zero? You're not even going to look when you have $0 of capital, but when you have some capital already contributed or already placed with yourself, you're like, you know what? I can go look for a deal. I'll give you a quick example. Jake, about 3 years ago, decided, you know what? We were around the 500 unit mark. He looked at a $55 million portfolio. I'm like, how are we even going to look at this deal? I got nauseous. I felt like throwing up. I don't know if anyone had that feeling. I got so scared. I didn't know what to do. But what that did was it prompted me to push myself to look into syndication. And I would not have had that feeling had I had the capital raised. So we looked at the deal. We didn't close on the deal. We weren't able to close on it. But for me, it was a learning lesson saying, hey, you know what? I need my ducks in a row. When I start looking at these deals, I need to have the confidence to be able to take these deals down. And you grow with time, right? So that's a great point. Have your ducks in a row. Be prepared. And you'll have the confidence to look farther and to look at bigger deals, because for us at that time $55 million was a big deal. But were we prepared? No, but it did prepare us for future syndications.
So let's just double down on this one more. I'm going to give one more kind of anecdote, right? And this is well documented, and people understand this, can relate to this, right? This basic notion. Let's say that you're in the market to buy a new car, okay? And all of a sudden you're considering, I'll just pick a car, a BMW 5 Series. And the moment you start considering it, when you're driving around, you're like, oh, well, gosh, there's so many 5 Series. Like, I didn't realize how many 5 Series there were. They were always there. You just didn't see them. And I think this is kind of what you're talking about, right? Is if you put yourself in the place to see these deals, they emerge, and you think it's magic, but it isn't. They were always there. You just didn't look for them. You didn't see them. They were blind spots to you. And so I love that idea of just getting yourself primed and ready, because then you're going to see these deals.
That's called the RAS, the reticular activating system. What happens is your mind focuses. That's what I'm saying. We focus on. We have so many things coming in at us every day. We would die if we couldn't actually just filter everything out. So what happens is you start really focusing, lasering down. My partner Jake affectionately calls it the flux capacitor.
I love that.
I like flux capacitor better. But really think about it. It's true. When you start focusing on something, all of a sudden you start noticing it, right? And it's just an amazing thing. Like I love the red car. You look at the red car, bam, all of a sudden you start seeing red cars.
Yes.
You're looking at deals and you start thinking about multifamily. All of a sudden, multifamilies, real estate podcasts are popping up, blogs are popping up. So that's important. What you focus on grows. If you start focusing on negativity, that grows. If you start focusing on positivity, that grows. And ultimately, you have the choice to what you want to focus on.
Amen. Well said. Well said. Look, everybody watching right now, we're going to put all the links below. They've also got a ton of books. Wheelbarrow Profits, Food in the Fryers, The Honey Bee. Those are some catchy titles, Gino, right? So I love that. So, check all these links out. There's a lot to learn here from Jake and Gino. So, Gino, any parting words of wisdom, anything I missed that you wanted to discuss today?
No, Randy, I think ultimately the last thing I'd like to just leave with everybody is just ask yourself this question. I asked myself back in 2008, are you building your own dream? If you're not building your own dream, then how can you start building your own dream, right? Because for me, my own dream was financial freedom. And what did that mean to me? Let's keep ripping things down. Financial freedom meant working with who I wanted to, when I wanted to, where I wanted to, and more importantly, why. I am never going to retire. I'm working harder now than I did at the restaurant. I just wanted to work for helping other people. I didn't want to continue to chase money. That is my why. And when I said I'm not really building my dream, I think I'm building my dad's dream of the restaurant and my brother's dream. I figured that out. That led me to the next question of what is my why, right? And then that led me to life coaching. So you keep asking yourself better questions, you keep getting better answers, and you keep getting better questions to yourself. So everybody out there, are you building your own dream? And if you're not, what does that dream look like? And what's it going to take that first step towards building your dream?
I love that. Are you building your own dream? I think we're going to have to name the episode that. Are you building your own dream? That is a great title for this episode.
Catchy title. I like that.
Yeah. Thanks for coming on the show today. I appreciate you taking the time to do this and to share your knowledge and wisdom, and I hope we'll have a chance to talk again real soon.
Thanks, Randy. Take care, everybody.
All right. Bye, Gino. All right. Well, there you have it. I think a great show today. Love the perspective that Gino brought. I think lots of really practical advice there. Some things to really think about. And I think where he ended there, talking about sort of really finding your why, right? And working towards your own dream, not someone else's dream. I think a lot of people struggle and wrestle with that exact thing. And if you don't understand your why, and that could be something that is deeply internal to yourself, it could be something that's slightly adjacent to you. It could be doing something for your spouse's future or your children's future or your parents' future or whatever, right? But you ultimately have to make it your own. So love everything that Gino said. Definitely check out all of his links and information below. They've got a great coaching program, lots of good books, like just tons of good resources. Definitely check out their podcast as well. So thanks for joining today. Until tomorrow, be safe, be healthy, be happy, get after it, find your why, okay? We'll talk to you soon.